Are we rolling? What is going on, YouTube? Welcome back to another weekly trade recap video. In today's video, I'm going to be going over the price action from December 15th through December 19th. As always, I'm going to be going over the wins, losses, and lessons in between. I get a lot of value from making these videos, but if you get any value from watching them, please like and subscribe. Comment down below after you're done watching the video and turn on the bell notifications. Without further ado, let's get right into Monday's price action. Let's do it. Alright boys, so I got Monday, December 15th's price action pulled up. As always, we're going to start out with the bias. Going to go over the two trades that I took today. But yeah, so starting out on the 4-hour time frame, the higher time frame, we were respecting this bearish for value gap right here, and we did have an SMT at these two lows right here. On the 1-hour time frame, this is what we were looking like. So going into market open, I was leaning more bearish on the day. We did have an SMT at some kind of major lows, but I was leaning more bearish. So I'm going to go over to the trade that I took. Alright, so I got my first trade pulled up here. This was a continuation model towards the lows. Let's talk about what's going on with this trade and what I saw. So after market open, we continued to dump down and we took out London and Asia low, and we didn't get any continuation shorts towards those lows. However, during the first 30 minutes of that market open right there, the bias was confirmed bearish on the day. We were flipping 1-hour gaps towards the downside. So at least we had that going for us, a clear bias now. We did print this 5-minute fair value gap right here, that after we took out London and Asia low, we retraced into the 5-minute fair value gap. So this is just another continuation model. Retrace to a fair value gap, highest time frame inversion, targeting the draw of liquidity, right? Pretty simple. So the highest time frame inversion in the leg that retraced to the 5-minute fair value gap was a 1-minute. We entered in right here, stop loss at the body high, break even at the low, targeting the draw of liquidity, like exactly like the model goes. This was unfortunately a break-even trade. I know. Let's talk about it though. So this was a break-even trade. Looks pretty good to me. These were kind of the main takeaways that I got from this trade. So the first one was we just took out London and Asia low. So we took out two main draws of liquidity already. So why was I still looking short? The previous day low was a major draw of liquidity that we still had intact. So that's why I was deeming it valid to still look for shorts. But I will say it's not more sketchy, but the probability does go a little bit lower after you take out two main draws, if that makes sense. That's how I feel about it. But this was enough of the setup. It was my model, so I took it. Now the break-even level, that's point number 2 that I want to talk about. So this is the break-even level according to the strategy. So you go break-even at the higher low of the retracement or manipulation, whatever you want to call it. And I go break-even right here once we hit this New York AM low, get break-even right away, runs to the draw of liquidity. So it's not ideal, right? It's not ideal for me. We're trying to make money out of the market. So the lessons and what I journaled from this trade is, does it make sense to go break-even at this low? Logically, does it make sense discretionally? That's kind of what I need to figure out. And I know it's December price action right now, but that's what I journaled for this trade. So going break even right away with the clear draw of liquidity after we seem to obviously respect this 5-minute and get our entry signal, does it make sense to go break even so close to your entry? That's what I'm dealing with right now. So if you guys have any input with that, if you trade the ICT, PB continuation, PB MEC, the PDI, or whatever, if you trade any concepts or those models, let me know what you guys do. I'm interested to know, interested to learn and hear about it. But that was the first trade. The second trade was on ES, so I'm gonna jump over to ES now. And we're already almost at the trade. I'm just gonna quick fast forward to it and then talk about it. All right, so same thing was going on. We were dumping towards the lows. Previous day low was not hit on ES, but we hit it on NQ. So we don't have to necessarily take it out. It's not required, you know? What's going on right here? So we have a 5-minute fair value gap that got flipped to the upside. That's what this is right here. So we flip a 5-minute to the upside, NQ hit the previous day low, and then we create a 5-minute bullish right here. So I was looking for another continuation to the upside this time. With the overall thought and idea that we just created this huge leg, it kind of makes sense to rebalance this leg towards equilibrium. That's kind of what I was thinking. and then we happen to get a continuation model to the upside. This is the same thing. So after we flip the 5-minute bearish, we create the 5-minute bullish, we tap it, highest time frame inversion, 1 minute, break even level at the high, targeting the 15-minute. The 15-minute was less than 1R. So my thought was, okay, I'm just going to go into the 15-minute and target 1R. I have to get minimum 1R on the trades. So there's kind of two thoughts and takeaways that I can take from this one. One being, you want to target the 15-minute and you want to target entering the 15-minute because that's where you can potentially reject off of. If this trade isn't a 1-to-1 R, maybe you opt out and you don't take it. Maybe it's not good enough. So that was thought number one. Thought number two is what I did live. Just go into the 15-minute gap. If you're confident in the 15-minute getting hit, it's really likely that you'll get this 1-to-1 and hopefully you won't reject directly off the 15-minute and go lower. So that's what I opted to, but I still went break even at the break even level being the high. So this is kind of the same thing. I went break even really close to my entry, but it's according to the strategy, right? So I need to figure out where I need to make an adjustment potentially, or if I just keep doing what I'm doing, submit to the strategy, know long term that it's profitable overall, if that makes sense. If I do change anything, kind of the thought is to go break even at a non-arbitrary level, like just go break even at a level that makes sense. For example, for this trade, it could have been the 15-minute fair value gap right here, and then I target the 1-to-1. And obviously I would have this one candle went through both of those levels, and so I wouldn't have I would have gone break even super fast, but then I would have just been out of the trade at 1-to-1. And so those are kind of the thoughts I'm thinking for these first two trades right here. I would say they were good trades. The break evens could have been improved, and so maybe that's something I need to work on going forward. But yeah, this was the two trades I took on Monday. I'm gonna go to Tuesday and I'll see you guys there. All right, boys, I got Tuesday, December 16th price action pulled up. Again, it was another 2 trades taken, but they were losses today. Yeah, I'm committed to showing you the real journey though. Let's talk about the losses. It's not as fun. Okay, so let's go over to market open and look at the higher time frame. So going into the day at market open, I was leaning bullish. I was leaning bullish because we were respecting these 1 hour for value gaps below. We were also inversing 1 hour bearish for value gaps. So we were respecting bullish, disrespecting bearish. I was leaning bullish on the day, but I did end up flipping my bias, and I'll talk about that right now actually. So I'm going to skip over a few candles and show why I flipped my bias. Okay, so now I can explain why I flipped my bias. On the higher time frame, we retraced the EQ of what I saw this 4-hour leg, and we had an SMT at the highs and a fair value gap. So there's this 4-hour fair value gap on NQ that we did not hit. On ES, we hit it. So here's that SMT. Here's the same leg. ES took out this high, NQ did not, and we started displacing lower. So I flipped bearish. Going down to the lower time frames, it was a continuation model set up short, but there's a key component that I messed up on. So what do? We create this 5-minute bearish fair value gap that we retrace into, and the highest time frame inversion was a 4-minute. So everything's looking okay for the model. However, this is where I went wrong, and I'll explain what I was thinking, but I think it was just wrong, and I'm going to learn from this. We retraced into the 5-minute bearish fair value gap. The highest time frame inversion was a 4-minute. Everything's looking normal. We were targeting the draws of liquidity lower. But if you look at ES, here's that same 5-minute fair value gap. You can see and notice easily that we actually already taken this 1 hour fair value gap below and the London low, the 2 main draws of liquidity. So NQ is not required to take those. I'll explain my thinking of still taking this trade. Obviously, I already learned from it, but here's what I was thinking. Since I flipped bearish on the day, and I was thinking we were going to be bearish, I was saying, oh, okay, ES took out the draws, but maybe ES will continue lower and NQ will take out the draws. The probability of taking trades like this is not worth it. Just don't take the trade. It's not A+ enough. I don't know how to say it. It's not a good enough trade. The probability is not on your side. If ES already took out the draws, there's no requirement for NQ to take out the draws. Sure, it could work, but it's not probable. So that's what I learned from this trade. It's kind of something I already knew, but talking about it out loud helps me, hopefully helps someone watching this video. But I did take 2 trades today, so let's jump into the second trade I took. And everything is mainly the same. So I'll quick draw it up for you guys. It won't take me too long. Bearish, 15-minute, lower time frame. I did the same thing again. This is what I'm seeing. I lost the first trade. We get a resweep of my high. So I'm thinking, okay, this is a clean resweep. Let's look for another entry. Highest time frame inversion in the leg was a 3-minute. So I get in on this trade, offering decent R, 1.77, targeting the draw of liquidity, the 1 hour fair value gap below. ES already took out the 1 hour fair value gap below. It already took out London low, both external draws. This trade had the same problem. It's not a probable trade setup to take, as most of you guys would probably know. If your draw of liquidity is taken, even if you think, oh, I think the charts can continue lower, it's not a probable trade setup, so don't take it. This was trade number 2. The lesson is really clear and obvious, but let's go into Wednesday now. This was a valuable day to learn from your losses though. So let's go to Wednesday. All right, boys, I got Wednesday, December 17th price action pulled up here. Let's get right into it. Bias, I was leaning bearish on the day. Got an SMT at the highs. I'll show you ES right now. Here's a SMT at the highs. That's also resting inside of the fair value gap. And we were displacing lower, inversing some gaps to the downside. So I was going into the day leaning bearish. All right, I'm gonna fast forward to the trade. All right, so this was another continuation short. So trade breakdown, we retraced to a 5-minute fair value gap. And you're probably like, yo, it doesn't even touch the 5-minute. On ES, we tapped the 5-minute. So we had a little internal SMT. So ES taps the 5-minute, NQ has the SMT. Highest time frame inversion in this kind of choppier leg was a 2-minute. All right, so we get the gap tap on ES. We have an internal SMT. And then highest time frame inversion, 2-minute. Draws of liquidity, we have a 4-hour intermediate low and a 1 hour fair value gap below on NQ. And I'll show you the 5-minute time frame because I think this was really important. We just have like all of these failure swings, So this is like almost higher time frame LR that I thought was going to be ran, and we're going to run all of them at the same time. I'll also show you ES. ES had all these failure swings. So this low didn't take out this low. This low didn't take out this low. This low didn't take out this low. You know what I'm saying? So we had draws lower. We had the 5-minute tap, internal SMT, highest time frame inversion, and this one I got stopped out. So I did put my stop loss at the body high, which is what I do. It's what I've said before. It's a strategy. This one I get stopped out. And I'm going to quick show you. We run all the levels. We run all the TPs. Just like kind of how I thought it was. All these LR, all this LRL, all these failure swings, we run, boom, we just take out all of them. So the timing was off in this trade, but this initial setup looked good to me. It was just another continuation with an internal SMT. I didn't know at this time that we were going to chop. I'll show you the 1 minute. I didn't know this was going to happen, you know what I mean? We're just chopping. And I've noticed this in December mainly, that we're not like delivering, kind of, I guess I can say. I did take more trades today though. I am gonna cut to those other trades because I don't want it to be super messy for you guys, but I did get my draw of liquidity. I had a very strong conviction that these draws lower on like this 15-minute time frame were all gonna get hit. All these little failure swings, I had a conviction that they were gonna get hit, so I did take more trades. It's just the timing was off on this day, so I'm gonna cut to that. Give me 1 second. Alright guys, so I got the second trade set up right here for the day. I'll update you what's going on. So we have this LR to the downside on the 30-second time frame, built up LR failure swings, and we have this SMT at this 15-minute fair value gap. So we reswept the high and we tapped a 15-minute above that we created. And so I was looking for another short opportunity. There's that 15-minute on ES that we actually tap into it. So that's why we have this little SMT. And then we get a 30-second displacement inversion right here. So this is where I enter the trade, break even at this level, and we get break even on it. And so this trade I was almost liking a little bit more because we had a tap of a 15. We still had an internal SMT. I took it on the stronger asset, the one closer towards the draw. And all I had to do was target this New York AM low now because it was really good RR. and we had more built up LRL to the downside. So this trade was almost looking better than the first one, but for some reason we wanted to chop around again when I would normally definitely expect this to just flush and take out this LRL to the downside. We have this now internal LRL, and we still have the external draws of all of these failure swings. And then the 4-hour intermediate low, it's just a low that's inside of a fair value gap, and the 1-hour fair value gap. So I get break even on this trade. And just the timing was off again. There was just chopping again. And I won't cut to the next one. I'll just quick fast forward to it, and I'll show you guys what I saw. We reswept the high again, and we had another displacement and another 1-minute inversion. So I'm like, okay, it has to get ran this time, right? Like we're going. And I'll show you guys this trade as well. Bro, I don't even know what to say. Like I was caught up in chop, but literally they stopped me out of my trade. There's another 1-minute inversion. I'm obviously not going to take this because I've taken 3 trades all towards the same draw, and then it runs. So this was a really frustrating day. We had that first trade, the second trade, which looked a little bit better, and I was expecting it to actually deliver. And then we had, okay, this is the final try. We reswept the high. This is clear displacement, and we had the 1-minute inversion. So we reswept the high, 1-minute inversion. Let's go take out this LR and then the high time frame LR and the draws. And then we get stopped out again. And then the next one, which I don't take because I'm trying to be a responsible, unemotional trader, goes. And it is definitely frustrating. There's nothing you can do about it. I do think it has to do with December a little bit, maybe. But honestly, I'll never know. It's just obviously frustrating having 3 trades towards the draw that gets hit eventually. The timing was off. The trade setups were good, stuck to the model, and then the one that you don't take to be responsible and to follow your rules goes. So adding on Wednesday to the overall week, now I'm like red on the week. I'm feeling it a little bit. The drawdown is getting a lot lower, but I can't really think of anything to take away from this. I really liked the first setup. The second setup looked better, and the third setup was like, I really thought, okay, we're definitely gonna take it now, like, and then boom, caught in chop again. So I guess I could learn off the third one to, once I identified that it has been chopping, like I didn't know it was gonna chop on the first one. And the second one was a resweep. We tapped a 15-minute clear displacement, got break even. That one was okay to take as well. The third one, I was probably being a little emotional, wanting my trade idea to like end up working out. So after wow, I just lost my voice. After I identified that we're like chopping on the 1-minute, 2-minute, up to the 5-minute, and it looks like this, I could just stay out of it. So that's what I'm going to go with on this as a lesson learned from Wednesday. But guys, that was super frustrating. Honestly, I don't even like looking at it. It's like the beginning of the week, could have won 2 trades. They were both break even. Now, fast forward to Wednesday, the draw of liquidity was correct, and the market decides to chop, So pretty frustrating, but that's why I do this journal, and I'm trying to learn from it and take what I can away from it and just keep growing. But let's go to Thursday, because Thursday got me back a little bit. Thursday was good to me. CPI. Y'all know what I did? I hope y'all did it too. It's low-key the strategy. Full porting CPI news. Pass a couple evals. Get your drawdown back a little. Yeah, it's fun. All right, let's go to Thursday. I'll see you there. All right, boys. Y'all know what we did on Thursday. Okay, so low-key, like quick pause in the video. Me and my trading bro, our accounts have been hit heavily this week, and we were like, yo, CPI is coming up. And okay, we weren't trying to make an emotional decision, so we tried to make a calculated decision. So we were going into this full porting CPI. So if you don't know what that means, look it up, but it's where you heavily leverage the CPI news candle with this strategy from online. And it's got an actually like 9 out of 10 win rate from backtesting like the last year of CPI. But I'll show y'all what we did. Bam. Okay, so here's why we full ported CPI. we have our fundeds, we have our evals. You know, we're trying to get paid, so we're trying to risk the correct amount. And this past week of December has been hitting us hard. You know, not delivering towards our draws of liquidity. The timing was off, lots of break even, so we didn't actually make money on the good trade setups. And so our evals and our fundeds were hit. I didn't full port my funded accounts, but I full ported my eval accounts to get the drawdown back up. So I ended up passing one of them, and the other ones are doing a lot better now. So the strat is at CPI at CPI news candle, like 2 minutes before, you set an order above and you set an order below, about 25 to 30 points above the current price action, and about 25 to 30 points below the current price action. And then if it lines up with like a structured 1 minute high or low, like maybe put it right there too. And then you target with about 5 minis, like 50 points or whatever you need to pass your account. A lot of people do this to pass fresh evals. It's like one of the easiest ways. But we didn't want to like go into this willy-nilly and stupid, so we back tested a full year of CPI, and it ended up working like every time. So I decided to take this opportunity. I haven't done this before, but my evals are, the drawdown is a lot better now on the accounts with Apex, and then one of them has passed, so I do have a fresh funded going into probably New Year, because as you can see from this week's video, December has just been so mid to me, so I don't know. And then next week is going to be a lot of, like, Christmas is next week, so I don't know. Gonna be really, really defensive or just take the time off probably. This was like part one of Thursday, full porting CPI. I'm not gonna lie, it was fun. It was nice to like win a trade. I think this was like the only trade I won this week, and it was full porting CPI. So yeah. Just keeping it honest with you guys though. So the fundeds are still hurt a little bit. They're not gone, but I guess I never told you that. I have a couple fundeds. I have some fundeds that are hurt right now based off of like the previous week trades. So those are hurt. They're not gone, but I have a fresh new one. And then I have like a couple more that are close to being passed on evals because of low-key this. So I'm glad I did it. Just wanted to show you guys that though really quick. It was kind of fun too. But honestly, if you ever need to pass evals, this is like the easiest way. And if you want to just back test it to get confidence doing it yourself, do it, because this like low-key works. I was kind of surprised. It was fun though. I'm gonna go to the actual trading day of Thursday, December 18th now. But yeah, this happened. We did that. All right, boys. So I got Thursday, December 18th price action pulled up. This is the actual New York trading session. This was after full porting CPI. But let's go into the two trades that I took for the day. I was leaning bullish on the day. We had data lows still intact. Data lows is a very strong draw of liquidity. It's like a magnet. But being as we were respecting this bullish fair value gap and disrespecting this bearish one so far, and this obvious 4-hour fair value gap that was also a 1-hour fair value gap, I was leaning bullish on the day. But open towards taking stuff towards data lows, basically. So let's get into the day. I'm gonna go to the 5-minute lower time frame, and I'll show you the trade that I took. Okay, so this is the trade I took. I skipped too far, but it's all good. Bearish 30-second, and y'all can probably see the trade that I took. It was right here. All right, so what do? We create this 5-minute bearish for value gap that we retrace into. Oh my. And then the highest time frame inversion was actually a 30-second, but it was clear and obvious displacement. And then also, what did we have below that data low, which is an extreme target, extreme magnet. And then we had a clear and obvious break-even level. So this was a good trade to take. Tap of a 5-minute highest time frame inversion and data lows below. So this was the first trade I took. I am happy with this trade. And I'll show you guys the result. Break even. Another break even, but not much to say. Just gonna move on. After we get break even out of this trade, we reswept the current New York AM low. And I did know this at the time. I did know this, by the way, at the time. We were trading within this 15-minute bullish for value gap. And so this was the second trade I took. With this resweep and this 1-minute inversion, this would be like clean in any other month, except for December, if you're confident in the highs. With there still being data lows, I would rather be defensive in December, especially. So I decided to take the 5 minute, which is the highest time frame inversion, just to get that extra confirmation, especially being in December. But this was a 15-minute gap tap, highest time frame inversion. We decided to leave the data lows and respect this 15-minute. So given that I was leaning bullish on the day and we had a really nice draw because we edged the 4-hour gap above, creating relative equal highs, I took this long right here. This was another unfortunate trade, but we'll go over it. So you can see it runs to the draw of liquidity, but I don't even get break even. I actually get stopped out, but this was also a really good trade to take. So what happened was took the highest time frame inversion and I did the strategy all correctly, putting my stop loss at the body low, going break even at this high. This high was far away enough and it would probably hit the TP anyway if it hits this. But yeah, I get stopped out at the body high, not the wick low. I get stopped out at the body low, not the wick low, and then it runs directly towards TP. So that was unfortunate. And I wasn't even offered the opportunity to re-enter the setup because we never had a manipulation at these lows and not even on ES. So there was no SMT, there was no resweep, but there was clear displacement after I get stopped out towards a 4-hour gap. So 2 trades that I'm really proud of this day, executed well. I need to remember to judge my days based off execution and not P&L. I'm trying to do that moving forward, so that's kind of the lessons I took from this one. But those were the 2 trades I took in the actual New York AM session, and then we had the CPI from before. But let's go into the last day, Friday. I'll see you there. Alright guys, so I got Friday's price action pulled up. This one should be a little bit quicker. It was a no trade day, but I'll still run through it really quick. So we got market open right here, and I'll talk about the bias. So bias was leaning long, respecting bullish for value gaps, disrespecting the bearish for value gaps, and clear and obvious draws higher. 1-hour intermediate high, 1-hour intermediate high, this 4-hour high. This is what it looks like on the 1 hour. Here's that high. Here's that high. So relative equal highs, really good draw. And they're inside of a 1 hour for value gap. And then here's that 4-hour high as well. So leaning bullish on the day, go back to market open. Immediately we were in this 5-minute bullish for value gap and we had these draws higher. So I was looking for something right off market open. But the 2-minute inversion, which was the highest time frame of this leg, it hit the draw of liquidity. So obviously you can't take that. It hit the London high and the New York PM high. So it was also right at market open, so it was a little sketchy. But that was what I noticed at first. Going to the 5-minute, I'm just looking for continuations long out of 5 or 15-minute gaps. And we just displaced towards the draw of liquidity. No retracement. So nothing, no continuation setups there. But now that we hit the draws, the 2 main draws of the day, I was looking for mech model shorts to rebalance the overall leg. Nothing presented itself. As you can see here, this 1 minute is kind of choppy. So no mech models and no continuations up towards these draws. Playing out the rest of my New York AM session, we actually do dip into the 5-minute gaps and the 15-minute gaps below now. Here's the 5-minute, here's the 15-minute, and there's nothing clear and obvious towards. The only draw would be the data high and then this 4-hour high. I was not confident in the 4-hour high, and there's nothing clear and obvious for me to take towards the data high. I also prefer continuations to be in discount and not premium of the leg, if that makes sense. You want to sell in premium, sell high, and then rebuy low, and then you want to buy low, sell high. And then also with the 2 main draws of liquidity being taken for the day, which is really unfortunate, it just obviously lowers the probability of any setups. So with it being December, the week I had, I was looking for something clear and obvious, which nothing showed up for that, and I was just trying to be defensive. So nothing was taken here. And then here's the New York AM session over. Yeah, so no trade setups there. It was like good price action towards a draw of liquidity though, just no continuations and no clear mech models out of it. But that's okay. One main point from the day that I wanted to talk about was to judge myself based off executions and not P&L, which is something one of my friends is currently helping me with. Shout out Drake. But I call him quite a bit, and he's a trader that is like ahead of me, and he's somewhere I want to be. So he gives me really good advice. But one thing I'm working on is judging myself based off executions, and you guys can do this too. Judge yourself based off executions and not P&L. Like if you take a green trade on the day, if you're green on the day and you're up and you did not follow your rules, you're not up. That's not a winning day. If you take a trade setup from, like I took a couple trade setups this week that looked good, that lost. It's really hard to judge yourself based off execution and not P&L, but be happy judging your day based off the execution that you did it right, not the P&L. The P&L doesn't matter. Like, do you want to grow as a trader or do you want to just be happy that you're green? You know what I mean? So that's something that I was calling him about that I'm working on throughout this whole week. As far as next week goes, I'll either be super defensive, continue being super defensive trading, or I'll just take trading off because a lot of people are taking trading off the week of Christmas because the price action is going to slow down a lot and it's not going to be high probability setups. So, but yeah, that was everything for this week. If you guys enjoyed the video, please like and subscribe. I'm filming my whole journey towards profitability. It is a long and hard journey. It's not easy. Trading is not for the weak. It's a big mental game. But I enjoy making these videos. It's really helpful for my journey. I'm going to keep making them. But yeah, guys, if you want to follow along, if you trade similarly to me, especially, I would love to like actually have feedback from you guys if you do the mech model continuation model. But that was everything I got for this week. So yeah, I appreciate you again, and I'll see you all next time.